Welcome to SOX 404 requirements and the Jobs Act. In blogs 17 through 27, we covered the foundation and theory behind Auditing Standard 5, which applies or tells you how to follow SOX 404. Now we discuss the SOX 404 requirements and the impact of the Jobs Act on public companies and new public companies. So in this session, we answer the following questions. What are the compliance requirements for SOX Section 404? What is the impact of the Jobs Act on SOX 404 compliance? What are the criteria to qualify for emerging growth companies? And what are the exemptions for emerging growth companies? Let's dive in. So what are the compliance requirements for SOX Section 404? It requires that A, you annually attest, the company test the effectiveness of your internal controls over financial reporting, and we now call this 404A. And then part B is the external auditors have to opine on the company's internal controls, and we call this 404B. And part of 404B is the external auditors have to disclose material weaknesses in internal controls that have to be disclosed in the registration statements and future SEC reports, meaning 10Ks and 10Qs. Now, conventional wisdom would say that if you have a material weakness in your S1 or your filing statements, it could negatively impact you. That may or may not be true. Some of the recent IPOs that we've actually seen material weaknesses, and it really didn't damper investors' interest for it, and it's probably because of the technology or the exciting future and prospects that it holds. Remember that SOX 404 can be a big effort for growth companies because of your changing processes and procedures to accommodate growth. Don't underestimate this effort because your accounting staff already has a full plate running the business. If you're contemplating an IPO, it means your business is going gangbusters. So start preparing 12 months, even 18 months before you file your S1 or your registration statement. And also consider the implementation cost, which can range from $150K to $250K, depending on your business. And it should be reflected in your budgets and your forecast if you're managing cash flow as well. So what is the impact of the Jobs Act on SOX 404 compliance? So in 2012, Congress passed the Jumpstart Our Business Startups Act, affectionately known as the Jobs Act. Now, it's intended to help reduce the burden smaller companies face in raising money. The Jobs Act limits some of the regulatory requirements for SOX compliance. The most notable change is the creation of the Emerging Growth Company, or EGC. It's a new type of public company. An EGC has less stringent regulatory and reporting requirements and is supposed to encourage public offerings for small and developing companies. And remember, this was during the Great Recession that we had. Now, under the Jobs Act, EGCs are exempt from 404B for the first 5 years after going public. And remember that EGCs still need to follow 404A and document and assess their internal controls annually. They're just exempt from the auditors auditing their internal controls. So what are the criteria to qualify for emerging growth companies? Now, Title I of the Jobs Act outlines the requirements for EGC status under SEC's reporting rule. For a company to be considered an EGC, its total gross revenue cannot exceed 1 billion with a B, in its most recently completed fiscal year. And your EGC status can be held for a maximum of 5 years after the IPO if you meet the 3 criteria below. One is that your total gross revenue doesn't exceed $1 billion during the 5-year period. The EGC's market capitalization doesn't exceed $700 million, And if you do, then you meet the criteria of a large accelerated filer. And the EGC does not issue more than $1 billion in non-convertible public debt in a 3-year period. So what are the exemptions for emerging growth companies, and why do a lot of companies want to qualify for this? Parts of the Jobs Act that would apply to EGCs would include requires only 2 years of audited financial statements in an initial public offering and other registration statements. It also exempts EGCs from SOX 404B that we discussed earlier. So that's the requirement to get an attestation report from your external auditors on the company's internal control over financial reporting. Exempts EGCs from future PCOB rules that may require auditor rotation. There was talk a while ago of actually there's already requirement to rotate the audit partner. In this case, someone was proposing rotating audit firms every 5 to 7 years. It's a lot of work to rotate audit firms. And so this essentially would exempt ECGs from that. It also exempts EGCs from potential rules calling for the expansion of the auditor's report on management's MD&A, your management discussions. If such rules were to pass, ECGs would get exempt from it. And it basically says other PCOB rules, unless it's to protect the investor, ECGs would be exempt from it. So it's quite a bit of easing into the regulatory environment if you're an EGC. So that's it on SOX 404 requirements and the impact of the Jobs Act. Thanks for listening, and we'll talk to you soon.